executive echo, executive echo, executive echo, executive echo.
Welcome again to Executive Echo. It's your host, Edwin Bruno. And today I'm happy to host Ammi.
Yeah.
Ammi is an investor. It's managing of money and everything in between. But of course, he's going to introduce himself. And today we are focusing about the future of investment. We called Money Talks. So since money, it's a currency and transaction for the economy and the life, we really wanted to understand what's the future of money and what is money. And, everyone wants to have it, I believe, Ammi.
Yeah.
So since you're an expert, we are looking forward to learn from you around that so that we can be safe and secure around that. But before we start, maybe most of the listener and the viewers will be asking themselves, who is Ammi? Where are you coming from in terms of your background, your expertise, and everything in between? Welcome.
Yeah, thank you, Mr. Edwin. My name is Ammi Julian, and currently I'm the head of research and investments at Orbit Securities. But Orbit Securities have just launched one of the latest collective investment schemes in the market called Inuka Money Market, where I also play the role as the portfolio manager for that particular fund. So we are currently at the IPO period where we are collecting this fund, and the fund will start off fully functioning from the 18th of October. So upon that money will be managed, and as a portfolio manager, that will be my responsibility, that whatever the investors are expecting from the investment, that expectation is met. On my background, I'm a bit of a nomad when it comes to academical background, because during undergrad, I took information systems, so I have a tech background.
Oh, okay.
So yeah, we learned all these back in the day, because it was around 2011 to 2013. It was at the inception age of mobile app development. So I think by the time I was finishing, that's when the languages like Kotlin were coming into the market, Yeah, so I have a tech background where comprehensive training in coding and stuff like that. But then I went for an internship. I did my undergrad in Thailand, Bangkok, and a very interesting place. I think there was a movie. There was a comedy.
Bangkok.
Yes,
yeah,
exactly.
I watched that movie.
Yeah.
Everything in Bangkok is like a money market. It's a market for everything.
Exactly. So I did an internship. And then when I did an internship, I was a web developer. But then I used to present that particular website because I was supposed to upgrade that company's website. And then I realized that it was not the tech people making the decisions. It was the business people. And I was like, okay, I think that other side is cooler or influential than this side. So I was like, okay, how do I get there? Then I started being curious. In university, during that time, you could do an internship, but also attend classes. Then I took a corporate finance class. And then it was interesting.
So you shifted.
Exactly. So I took one class. That class inspired me like, okay, investment seems cool. Yeah? So what should I do? Upon graduating for my for the bachelor's, I decided, okay, enough with the tech background, I'll move into the markets. How? Then I went for a master's in Peking University. It's one of the top universities in Asia, actually. I think within the it's top 3 around Asia and top 20 around the world, as per 2024 rankings, yeah. Quite competitive. But I was able to get admitted there for a master's in economics, specifically specializing in financial markets.
Yeah.
So where I was, it was like the hub of financial markets. And funny thing, here in Tanzania, you find that economics is not tech-related.
Yeah.
But in advanced markets, economics now, without a coding background, there is no way you are surviving, because you have firms now, the likes of Amazon,
digital
hiring
currency
economists because they need to, when it comes to e-commerce, placing a particular brand to appear on the first page. That's called auction theory. And to do that, you have to have an economics background, but you also need to have a tech background to create those particular algorithms. So I was okay, I did not know that I was actually, by doing information systems, I was preparing myself for economics, because when I was there, it was fully theoretical but also tech driven. You have to forecast models. To do this, you need to code. There is no way you're going to forecast those models using Excel or using a mere calculator. So I was like, okay, thank God, these two things are complementing. So I did not lose the first background. Yeah. Finished my master's, came to Tanzania. Of course, that was around 2018. Got into the University of Dar es Salaam, where I was sitting for my PhD in economics once again.
Oh, okay.
But then in 2020, I was like, okay, upon finishing my coursework, I was like, let me get into the industry, because I'm not too academical. As in, maybe later in the future, but I don't see myself within the near future being in a university. I'm more of a practical person. Then I got into TPSF as a policy analyst. Yeah. So at TPSF, it being a private sector apex body, I was in the research arm of it, where normally we would analyze these particular tax policies, noise implication, and how they're affecting the business environment.
Yeah, policy.
Exactly. But my true passion still lied into the financial markets. So I stayed at TPSF, and at around 2021, end of 2021, that's when I moved to Orbit Securities, which is a brokerage firm here in Tanzania, among the founding members of the Dar es Salaam Stock Exchange.
Oh, okay.
Yeah. People usually do not know much about financial markets in Tanzania. The Dar es Salaam Stock Exchange started in 1998, and Orbit and other 5 brokers were the founding members. So Orbit as well is now more than 25 years in the market. So what we do over there, first, there are 3 main roles we do. First, assist people in trading, investing in stocks, but also investing in bonds. But also we assist companies in raising capital. So you have one of the largest IPOs we did was for Vodacom in 2017. But we've done that for several companies. Actually, we have done more than 60% of the listings in the Dar es Salaam Stock Exchange were done by Orbit Securities.
60%.
Yes. But also we are fund managers, or in developed markets we say asset managers, where we manage people's money, and that comes to our latest product, the Inuka Money Market Fund, which is a scheme catered to Tanzanians to be able to invest, support them, assist them to know where to save money, but not only saving, because saving in itself is not enough. It's saving in a place where you get the highest return. So funds like these ones are the ones which assist. So Orbit, that's Orbit for you. Asset managers, financial advisors, but also brokers.
Yeah. I think it's an interesting portfolio which you are actually sitting on, but of course quite on your intensive background from tech. Now you are into financial market. Of course, we'll come back into that. But the most important thing, when people are listening or watching, first of all, they want to know from the expert point of view, what is money? When we talk money, what is money? We need to start from there. Right. What is money? So then after that, we go to different characteristics. On your perspective as an expert, what is money?
Yeah, so money, without speaking the typical difficult economic terms, because money in an economic terms, it is too complicated.
Yeah. In a simple way. Language,
Money is transparency. I want to buy this bottle of water. How do I do it? What should I give you to get this ownership?
Yeah.
Money provides that. So it's a medium of exchange. So once I give you the money you need, you give me the bottle of water, I get the services. So at least it facilitates exchange of products or services, and it ensures that both parties are rewarded for that particular exchange. One gives up, one gets in. But also money is a store of value. How do I know that let's take an example of a farmer in Morogoro storing maize. How do they know that their maize is priced better now compared to last year.
Yeah.
It's through money. So money is a store of value. At least I know I have maize worth Tanzanian shilling 5 million. And then that is kept into somebody's brain. They don't think like I have 45 sacks of maize. No, they think I have 5 million worth of maize.
Exactly.
So it's a store of value.
Yeah. So money, it's a value transaction.
Exactly.
Because back in the days before money, it used to be people that were doing things through barter trading.
Exactly.
And then after that, we introduced money in terms of now money define each and every barter trade to have like a certain value. But now when we come into the industry of now in the future, now we have digitalized that money.
Exactly.
Not really necessarily for me to touch the money, but it's a value around it.
Yeah.
And now even for the future, that means we are talking about investing, which means we are growing the money, but of course on the background, it's a growth value into that.
Exactly. I went through a simple paper today morning when I was preparing to come here. It was in LinkedIn. It was saying that it was from Schwab, one of the largest stock brokers in the world. They were saying 8% of money today, only 8% is cash. And the rest is digital money, you know, the likes of M-Pesa. Because now, what are the chances I have cash? Quite low. Most of the money is just a number I see in a mobile app, maybe from my bank's application. It could be SIM banking, it could be M-Pesa and so on. But cash only accounts for 80%.
80%
of the cash. Yeah.
Though now when we will discuss later more into investing now it shows that it's creating a lot of other virtual money. Yeah. Which is not there. That's why it's like, banks and the investors, they're just printing money to oversee. Like if you say a certain company is worth X billion, it's not really like we're going to print that X billion to have it. Yeah. But it's just a projection value, which now I think it's a biggest topic which we are now discussing today about investment. Now we know what the money, we know the value, and now what is investment?
Okay. Now, just after talking about money, a lot of people think having cash, they confuse between having money and being wealthy. Having cash is just, it facilitates liquidity.
Yeah.
You want to transact. Now, investing is the process, it's the necessary requirement for you to graduate from being cash rich towards being wealthy. That's something has to happen for you to move from having active income, where you have to wake up every day and go to an office and wake up every day and go to a kiosk and do business, to you also doing something which creates passive income, so that when you are at an advanced age, you can be able to live comfortably. So investments, it is that action of creating value to your money, value addition to your money, making sure that money starts earning interest. Also, in other words, I'll take an example of a Maasai nomad who keeps livestock. Investing is that process where that young man has cows. They've given birth to the young ones, but making sure they take care of the young ones so that they can give birth to even the other younger ones, so that they could have many cows. So it's the process of now making money create money. That's investing. Value addition to your wealth.
Yeah.
I have 1 million today. How do I make sure that this 1 million grows to 10 million? So there are two platforms there. One can take the active investment route. So you find a young guy, maybe they get capital, they will open a shop, a wakala. Let's say a simple example is a wakala agency where they have the M-Pesas, the CRDBs, the NMBs and stuff like that. And they start transacting, they create money. They create that particular business. That is active income, because it relies also on your acumen,
availability,
your availability, you being healthy. Because if you get sick, you have to stay at home. One could also get employed, earn a salary. One could open a company, get contracts, and so on. But then investing, from my angle, comes from that angle of passive income, where I'm already self-employed, where I'm already employed, earning a salary, I'm already a business person. What do I do with my savings?
Yeah.
Do I just keep them at home? Do I keep them in the bank account? What do I do with them? That's where markets like the financial markets come in. Because then you'll find that particular young person, once they start investing, if you put money in a simple bank account, you earn an interest. The highest amount you can get is roughly like 1.8% per annum. In simple numbers, you put 100,000 shillings, Tanzanian shillings. That is, if it's 1.8, that is in a year you just make 1,800 Tanzanian shillings. That's small money. I have decided to not factor in the costs of
Actually,
living.
that's what I wanted to say, because as much as they say on saving you make that 1 point whatever percent, first of all, after 1 year, your money as a cash is already depreciated
from
and
inflation.
on top of that, there is a bank charges in terms of the way you are saving. You are paying the bank to or a telco in terms of a wallet for them to keep your money.
Exactly.
That means saving. It's actually when they say, like on money, I learn it in a very different way. I remember my first financial book, which I read because I love money. When I was in uni, one of the book was Rich Dad, Poor Dad by Robert Kiyosaki.
Everyone's first book.
Yeah, that was my eye-opening book in terms of how can you make money works for you.
Exactly.
And then when you look into it, all these inspirational people, they're telling things, they're actually telling it differently. Which means there's a difference between self-employed, business, being rich, being wealthy, and be self-sufficient.
Exactly.
So now when you talk about investment, because this is a topic which most of the people, they are not talking about, because in the normal industry, we have been told for you to be rich, you need to save to be rich. For you to, to be financial proper for your future, you need to save for the future rather than you need to invest for the future. But of course, investment come with risk. How do we calculate that risk management? Because investing doesn't guarantee that you are going to plus the money. Sometimes you can lose all of it.
Exactly. And that's why I always say that's why financial markets are around. Because they are products, they are investment products which caters to everyone's risk appetite. Because as much as investment is numbers, investment is psychology.
Yeah.
And when we talk about psychology, it's just not psychology. Investment is understanding yourself, your needs, your goals, and what you are comfortable to make. What type of money are you comfortable to make? What are you willing to lose? You know. So you will have in financial markets, you will have the safest products in the market. Now the safest products are the government bonds. Yeah. Where. For somebody who's just listening to us for the first time, they may say, "Okay, what is the government bond?"
What is government bond? Yeah, T-bond and everything.
It is a product where you lend money to the government, and in return, the government gives you that contract, which is now a bond. It's an indenture. That's it could be a 25-year contract where they say every year, because of this 1 million you've given us, we'll be paying you 15.95%. interest
per year.
Yeah.
Okay.
And then once every year for that particular tenure, it could be 10 years, it could be 15, 20, or 25 years. And upon maturity, once that tenure ends, we will return back your principal. So as you see, one's capital is not lost. It is it's just transferred to the government through the Bank of Tanzania, and that particular person earns an interest. And these types of products are best for people who have just retired. Imagine somebody has been a teacher for good 30 years, a good career teacher. They retire, they get into a high volatile business like agriculture, where they are exposed to volatilities. You would think today rice is this particular amount, sold at this particular amount. The moment you start harvesting, things have changed.
Yeah.
Yeah. Oh, you're in the maize industry. The moment you are about to have a good year because there is a maize is scarce in the market, the government intervenes, yeah?
Yeah.
And
Flatten the right.
exactly, and puts a cap on the price. So this farmer is prone to price volatilities.
Yeah.
But then this same person who have just retired, they do not need to actually go to these risky businesses. They could simply, for instance, a person who has been in a managerial position, they retire maybe getting a pension of 100 million Tanzanian shillings. This person over time, because these are our parents, they are not spenders per se.
Yeah.
So they can easily live on less than 1 million per month. Yeah.
That 15% of
you invest this in a 25-year bond, 100 million. It simply says every year the government will give you 15.96 million Tanzanian shilling each year for the next 25 years. So for that person, you get that money, just divide it by 12 months. You comfortably see it's around 1.2 million every month. This person continues to live comfortably for the next 25 years. Because another risk now is because of advancements in health and technology, people tend to outlive their pension.
Yeah.
So you retire at 60. Maybe the actuarials in the pension funds, they've calculated that your pension you will almost, the sad thing is actuarials calculate when they expect you to die, maybe at 80. And then due to technology, my friend, you go beyond the threshold.
Yeah.
And then your pension cuts. What are you supposed to do?
Yeah. But also it's on the same thing. Someone might ask, okay, I'm retired now at 65, and now you're advising me to buy a bond for government bond for 25 years. But you see, I'm not going to live for the next 25 years. What's going to happen when I die in between?
You can simply sell that bond in the Dar es Salaam stock market. Stock exchange.
It's going to the family.
So the difference between a bond and a fixed deposit in a bank is that the fixed deposit is a fixed deposit. If you want to recoup your money, you have to pay something, yeah? To break that contract of you saying you'll stay with this money for 6 months, yeah? A bond, it's more of a traded product. You have provided that capital to the government. It pays you. You not necessarily that you're going to stay with this bond for 25 years. Once you want that money back, that's why there is the stock exchange. You come to a broker, you say, you know what, I have this 25-year bond. I think I need that money. The broker, what will do, will place that bond on sale. And then there are people also buying these bonds in the stock exchange. They will buy it, and it's quite liquid. A 25-year bond, within 1 business day, you have sold it, you have got your money back. So imagine if it was real estate. That could be, for instance, one needs to go to India for a health checkup. That could take 6 months. That could take even a year due to liquidity issues in the market, yeah? But bonds are quite liquid. But then, I've said bonds are the safest, yeah? And then you have the likes of stocks.
Yeah, stock, yeah.
Yeah, which always have, they're quite popular, ups and downs. These two are great. Of course, they've had a bad reputation, but trust me, I've been in the market since 2021, and I'll tell you that stocks have also made money, serious money for investors for the past 5 years. These, I would advise people with a higher risk appetite because they have the tendency of going up but also coming down. But provided you have chosen the right stocks, because this is not betting, this is not gambling. This is there's a systematic way to look at these particular stocks. And I always tell people, pick stocks like the way you would pick your football team. Yeah. In Tanzania, you rarely find somebody being a fan of Namungo, but you'll easily find somebody supporting Young Africans or Simba or Azam. Why? Because of the probabilities of these guys becoming champions. Yeah. So is stocks. They are good for people with higher risk appetite, but they need a certain system.
Yeah.
So pick the stocks if you could ask me, like, I mean, how do I pick a good stock? Choose a company which is an industry leader in its market.
Okay.
So you have the banks. Choose a bank which is leading. You would not want to choose a bank which has just 3 branches.
Yeah.
You would want to choose a bank which has more than 100 branches. Because it being an industry leader, it means that it has a good business model. That model is scalable. It has been scaled, it's scalable. But also they have their strategies right. They know what they are doing.
Yeah.
You pick such a company with these criteria, you are sure to make money in the stock market.
Yeah, but I think I have a challenging question there based on the most of the people we are sitting and discussing investment. And actually, as you said, investment is when you pick a certain investment pattern, of course, for a company which you want to buy stock into. Most of the people, there are other people which they are choosing by emotion. Maybe they love the brand. And there are other people which they are choosing based on the data. And it's actually, even though you say it's not like betting, but somehow it's like betting. So you say in betting, me, let's say I'm a Yanga fan, and other person is a Simba fan. You know, and when I want to do betting, most of the time, I know by fact somewhere, somehow, maybe my team is not prepared well. Yanga this week is going to get 8 goals or whatever. But I don't do that, and I choose to bet on the favor of the team I love rather than looking in terms of what are the odds which are into it. That is to say, at the end of the match, you either choose 2 things. Do you want to win based on the value of the market for the money, or do you want to win emotionally that your team have won? That means you do vice versa.
Exactly.
So it's a similar also to the stock market. Most of the people which have seen they are doing investment on DSE, you see they are treating it like a saving account. So you see, you have put maybe your stock maybe in a certain one of the leading maybe top 10. You know, and then you find out someone have not touched that investment for the past maybe 5 or 10 years. You understand? But we are not being taught to look also in terms of data. Like, let's say if today I'm investing on company X, I can run with it after 1 year. If things are not going well, I can actually shift. So you have seen maybe the management or maybe the board of directors of a certain company X, they have been changed. There is a new CEO coming in. We are not asking ourselves, what does that mean to that company? Am I continue to put that because I love the brand, or this person is actually going to elevate the company, or maybe in the next 1 year, I need to shift my money to somewhere else so that, you know, I can try to see and trust this person actually can grow my money. How do we invest in terms of loving of the brand vis-a-vis the data and the whole ecosystem? Because that's where the education is missing, and people are trading it like they're putting a saving account.